Welcome back to the channel. I'm Algabot, and today we're taking a close look at an expert advisor for MetaTrader 5 called Fractal Structure Break. This is a pure price action strategy, inspired by the ICT idea of a break of structure, and it uses no indicators whatsoever. Instead, it reads the market the way a discretionary trader might, by mapping out swing highs and swing lows and watching for the trend to confirm itself. In the next few minutes, you'll learn how it spots market structure, how it decides to enter a trade, and how it manages its risk. Let's get started. So what exactly does Fractal Structure Break do? At its heart, this expert advisor is a trend continuation system built entirely from raw price. There are no moving averages, no oscillators, and no momentum indicators of any kind. Everything it knows about the market, it learns by looking directly at the high and low of each candle. The strategy works by locating swing points using something called a symmetric fractal. In plain terms, a swing high is a bar whose high stands strictly above the highs of a fixed number of bars on each side. The mirror of that rule marks a swing low. Once it has identified these pivots, the strategy reads market structure from the last two confirmed swings. When it sees a higher low forming alongside a higher high, it considers the market to be in a rising, bullish structure. When it sees a lower high alongside a lower low, it reads the market as falling or bearish. From there, the EA simply waits for confirmation. It wants to see price break out of the existing structure with conviction by closing a candle beyond the most recent fresh swing. Only then does it act, and it always trades in the direction of that structure, which is why we call it a trend continuation system rather than a reversal system. Who is this style suited for? Educationally speaking, it tends to appeal to traders who think in terms of market structure and price action rather than indicator signals. Because it relies on close bar confirmation and structural stops, it's a patient approach that can go quiet during choppy, directionless conditions and become more active when a clear trend is underway. It runs on whatever single time frame you attach it to, so you can study its behavior from fast intraday charts all the way up to the higher time frames. Remember, everything here is for educational purposes only. Let's walk through the exact logic step by step. The first thing the strategy does on every closed bar is hunt for fractal swing points. It looks at a candidate bar and checks the bars on either side of it. If that candidate's high is strictly above its neighbors on both sides, it's confirmed as a swing high. If its low is strictly below its neighbors on both sides, it's a swing low. The number of bars required on each side is controlled by a setting called SwingStrength, and a larger value means the strategy only recognizes bigger, more significant pivots. Each time a new swing forms, the EA remembers it and marks it as fresh, meaning it hasn't yet been used to trigger a trade. It keeps both the newest swing and the previous one, because comparing the two is how it reads structure. Now for the entries. For a long trade, the strategy needs to see a bullish structure, which means the current swing low is higher than the previous swing low, a classic higher low. With that condition met, it waits for a closed bar to close above the most recent fresh swing high, and not just barely, but by a small buffer sized from recent candle ranges. When that confirmed break of structure happens, the EA signals a buy at the ask price. The short side is a perfect mirror. The strategy looks for a bearish structure where the current swing high is lower than the previous swing high, a lower high. Then it waits for a closed bar to close below the most recent fresh swing low by that same buffer. When the strategy detects this break, it signals a sell at the bid price. Risk management is purely structural. On a long, the stop loss is placed just beneath the protected higher low, padded by a fraction of recent range so it isn't sitting right on the wick. On a short, the stop sits just above the protected lower high with the same padding. The take profit is then set as a fixed reward-to-risk multiple of that stop distance. With the default reward-to-risk of 2, the target sits twice as far from entry as the stop. Finally, the EA holds only one position per magic number at a time, so it never stacks trades, and once a swing has triggered an entry, it's consumed and won't fire again. Let's read through the code as if we had it open in MetaEditor. At the top, we have the input parameters. SwingStrength sets how many bars must sit on each side of a pivot, so raising it makes the strategy pickier and only flags larger swings. RewardRisk is the multiple applied to the stop distance to set the take profit, so a value of 2 aims for twice the risk. Stop pad multiple adds breathing room beyond the structural swing for the stop, expressed as a fraction of recent range. Break buffer multiple sets how decisively price must close past a swing to count as a genuine break, again as a fraction of range. Range window is the number of recent bars averaged to estimate that recent range, and lots is simply the trade size. Now the signal logic. This block handles the bullish break of structure. The first check, G_high fresh, confirms we have a swing high that hasn't been used yet. The next line compares the current swing low to the previous swing low. If the new low is higher, structure is rising and bullish. The third line is the trigger itself. The close bar's close must be above the swing high plus the break buffer, a confirmed break above structure. When all three conditions are true, the EA reads the ask price as its entry. The stop is set at the protected swing low minus the pad. Risk is the distance between entry and stop, and the take profit is entry plus reward risk times that risk. The strategy then sends the buy order with those stop and target levels attached, and finally sets high fresh back to false, consuming that swing so it can't trigger again. The short side, which isn't shown here, is the exact mirror of this logic. Let's watch the strategy work on this chart, and notice there are no oscillators here. Only price and the structural swing levels the strategy draws for itself. On the left, price pushes up to form a swing high around 1.0866, marked by the upper blue dashed line. Price then pulls back and carves out a higher low near 1.0846, the lower red line. Because that low is higher than the prior low, the strategy now reads the structure as bullish. It simply waits. On the sixth candle, price closes decisively above the swing high, clearing it by the required buffer. That confirmed break of structure triggers the buy entry. The protective stop tucks just under the higher low, and the take profit is projected at twice that risk. Price continues climbing, and by the eighth candle it reaches the take profit level around 1.0914, completing the long trade. Now watch the structure flip. After topping out near 1.0918, price rolls over and prints a swing low close to 1.0894, shown by the lower blue line. It bounces, but only to a lower high near 1.0909, the upper red line. A lower high tells the strategy the structure has turned bearish. It waits again, and when a candle closes below that swing low by the buffer, the sell entry fires. The stop sits just above the protected lower high, and the target projects downward at twice the risk. Price slides lower over the next candles and reaches the take profit near 1.0847. Both trades, long and short, follow the very same structural rules, just mirrored. This illustration is for educational purposes only. And that brings us to the end of our look at Fractal Structure Break. Today we covered how this expert advisor maps market structure using symmetric fractal swings, how it reads higher lows and lower highs to define bullish and bearish trends, and how it enters only when a closed bar confirms a genuine break of structure. We also saw how it anchors its stop to the opposing structural swing and projects a fixed reward-to-risk target, all without a single indicator. Remember, everything in this video is educational content only and is not financial advice. If you found it helpful, please like the video, subscribe for more MT5 strategy breakdowns, and leave a comment letting me know which strategy you'd like to see next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.